Trade limitless on HMX, the next gen decentralized perpetual exchange. Trade crypto, FX, commodities with up to 1000x leverage on the Arbitrum network. Benefit from low fees, multi asset collateral support, and cross margin flexibility. Check them out.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together, there is no stopping us.
Hello and welcome, my friends. Jay from Trading Tank here, and today we have a very special guest. So I suggest you get ready to take some notes because we have someone who is not only highly regarded in this space, but also one with many years of market experience. The one and only charting man, Dan from the Chart Guys, is with us. Welcome, Dan.
Thanks for having me. Glad to be here.
It's a great pleasure. Would you start us off with a little intro to your background, how you discovered the markets and eventually made your way into crypto?
Sure. So back in college, 13 years ago, I was a sophomore at that point and really just had, the mindset of how can I make money so I don't have to commute? I watched my dad commute to work to the city every day for decades. I don't want to do that. So what can I do? The internet's a wide world of opportunity. What can I do to make money so I don't have to do that grind? And then, went down the rabbit hole, started exploring some stocks, and I actually started fundamentally in the penny stock world and very fortunate to survive there, but just started to get used to, markets and trading and bids and asks and all that. Eventually, after a year or two, stumbled into technical analysis and had a couple mentors who I was, keeping an eye on. These people seem to be right a lot more than other people. And so I'm going to pay attention to what they're doing and try and learn from them. So traded penny stocks for a few years, graduated up into the real markets once I had a bit more capital. And then 7 years into my trading journey, 2017, got interested into crypto in May of 2017. And honestly, it was the charts that made me interested. The story was nice. I liked the story of Bitcoin and the freedom and the opportunity that it provided. But really, it was the confidence of once you're confident in technical analysis, it doesn't matter what it is on the chart. I'm comfortable trading it. And I could see, these things are near all-time highs. I know that when things hit blue sky breakout, there's significant opportunity. So I'm going to get interested and start trading these markets. And it was obviously the very right time to do so, right before that big monster run. And I honestly felt like, my prior 7 years of trading experience were literally just pushing me towards that one moment in time and preparing me for that one moment in time. So very fortunate to discover crypto and have been trading it for the last 6 years ever since. But again, just one, asset. I trade stocks, I trade crypto, wherever the opportunity is during different cycles, I'm bouncing around.
Yeah, great point. Sometimes all it takes is one good bull run in an asset like crypto. So I've been following you for quite a few years now, and I have to say your work ethic is exemplary. It's not as if you just wake up in the morning and say, I think I'll trade the Qs today, or energy, or miners, or financials, or crypto. Your approach is a lot more structured, and you seem to know exactly where to be looking at any particular moment to find those opportunities in the markets. Can you distill this down to a particular routine or set of practices that helps you to prepare so well?
Sure. So it's, number one, you got to have passion. You have to love the markets. And if you find yourself, people want to make money, and of course that's part of it, but that can't be the core. It has to be, I really enjoy this. And, for me, my consistency, I've been doing this literally every day for the last 9 years, 7 days a week, doesn't matter, holidays, whatever. I wake up Saturday morning and I want to look at charts and make content and prepare. And so that's the passion that leads to enjoyment of putting in that much time and effort. But it's just keeping a pulse on things and just, I view markets as this organism. It's all these little individuals, but a collective consciousness that's like this organism. It's a moving, thinking, breathing thing. And just looking, where's capital flowing? How does social media come into things? And that's something that has significantly changed throughout my 13 years. Back when I started, Twitter wasn't a thing, didn't have to be watching social media. And then, of course, when we had Trump as president, he would put out a tweet and the markets would go nuts. And so now social media is a major aspect. And so it's just a game. I just view it as a game. It's like a video game. It's flashing numbers, and I enjoy it a whole bunch, and the psychological aspects of it. So that has allowed me to do it for so long and to stay tapped into the market, because if at any point, I reached a point where it seemed like work, that's when I start to underperform and not have the same kind of passion.
Yeah, I think it's, that love for your craft that definitely propels you and keeps you going. If you don't love what you're doing, you're probably not doing the right thing. But to me, it's the work ethic aspect that a lot of traders lack, and it keeps them from going to that next level, or reaching the next goal, or even just attaining profitability. Let's be honest. Do you think this is because most traders are siloed, as in like they operate alone and don't have a community around them for support? Could it be a combination of that and life patterns that maybe aren't quite optimized? Maybe they lack a professional workstation to operate from. What are your thoughts?
Yeah, absolutely. It is accountability. If I know for a fact, we started the Chart Guys 9 years ago, 8.5 years ago, and I know that I would not be as successful a trader if I were trading by myself. As soon as I start putting myself out there in terms of, sharing some trade setups that I'm looking at or whatever it is, I have to ensure that I'm at the top of my game. There is no, I'm on a pedestal essentially, and I want to be setting a good example for everybody because I'm trying to show people how to do this. And so that is another thing that has drastically improved my consistency and discipline, because I wouldn't be waking up every morning and putting in an hour, 90 minutes of preparation before the market even opens if I were just doing this by myself. I do that sometimes, but because I'm doing it with and for other people every single day, it's part of my routine, and it keeps me from making bad trades. I don't want to be. I have to follow my rules. What kind of educator would I be if I pull my stop loss and start averaging into a position and now I'm a bag holder? That's not an option. So I would suggest anybody that is trading alone, even if it's just, one friend that you're talking with and sharing ideas with, that accountability is essential. And it can be strangers. The vast majority of people that I've been accountable to in my life as a trader have been online internet strangers from the beginning. And you just establish these relationships. That's part of the beauty of the internet, is you can connect people from around the world, and you have shared interests and you have shared goals, and those combinations are very powerful. I lived with an entrepreneur for a short period of time, and just the way that we played off of each other and the positive momentum that we would have just through conversations and our lifestyles, it's very powerful.
Yeah, awesome. You've always been a big proponent of this community aspect, and being one of the community leaders yourself. It's been cool to see how your community has grown and how many people you've helped along the way. For sure. What are some of the other keys to your longevity aside from what we've already touched on, and how do you plan to extend that well into the future? Do you see yourself continuing on this path for, say, another 5 to 10 years or more? Or is there another dream out there for you?
So I would break up longevity into two sections. I would say longevity in terms of your first 2 years, let's say, because that's the hardest hump to get over, because you're newer, you have not experienced the lessons, and you're learning that this is a very difficult game, and you're learning, oh, wow, these are my emotions that are coming into play. And so key number one for longevity is preserving your capital. And, a lot of people want to make money quickly. That's why people have a draw to markets, and that's understandable. But we want to be playing this game for decades. The market's not going anywhere. And, I look around at my friends' grandparents or whoever, they've been in the market for 50 plus years and it's had significant benefit in their life. So we want to be having a multiple decade mindset, which means preserve your capital so you are in this game long term. I shudder to think about, I started with $3,000 that I saved up in high school jobs money. And my mindset was, all right, I'll give this a go. And if I lose this money, I'll just get a 9-to-5 out of college like everybody else. And if I had lost that initial seed capital, I would not be a trader right now. And so you have to start small. You have to assume you're going to lose. This is an extremely difficult game. The most dangerous thing that can happen to a trader, and I was just having this conversation last night with a trader, is finding success in your first year because of the market environment. Whether it's just a raging bull market, post-COVID bounce, you throw money at anything, you're going to make money. And you get this false sense of confidence, like, I've got this figured out. I can do this forever. When in reality, you've experienced one little market cycle. There's bearish market cycles. There's sideways choppy market cycles. And that's a rude awakening for a lot of people where, they have this initial success and they think they've got this figured out. And then they realize, oh, this is very different. So you've got to preserve your capital and you've got to make the lessons, or I should say you've got to make the mistakes to learn the lessons. That's something that, I used to get frustrated with as an educator. Rule number 1, use a stop loss on every trade. We've got to preserve our capital. And then people, who some of which are paying for my information won't listen to what I'm saying. And I would get frustrated, like, why are you not listening to rule number 1? And then I came to realize eventually, like, okay, people have to experience it. You have to feel that sickening pit of your stomach feeling where you want to throw up because of the decisions that you've made and the money that you've lost. And then you learn from that and say, I don't ever want to feel this feeling again. I'm going to put a stop loss on every trade. And that helps lead to the discipline to continue preserving your capital. So that's the starting point. The next point is, okay, you're through the initial hurdle. You survived a bit in markets here. And it's, I preach a lot about balance. And by balance, I mean, we're putting in a ton of screen time. We want to put in as much time as possible to watch price action play out, to experience these mistakes and lessons. And I'd say, you got to go outside, you got to get into nature. And recently, over the last couple of years, I've been reflecting upon, preaching balance and realizing every single successful full-time trader that I know, and I know a good bit of them, through the years, there's a period of obsession for all of us. And by obsession, I mean trading goes to number 1 priority in your life, and you are giving it everything that you have. All the time, weekends, doesn't matter. You're putting in an insane amount of time. And I don't know any full-time traders that didn't have that period of obsession. And so it's key to not stay in that period. And, in 2017 crypto, I pretty much from May into the end of the year, that 7-month span, I recognized, okay, this is an opportunity that's going to be limited. It's not going to stay like this. And I need to capitalize on this as much as I possibly can. So I literally made decisions in my life. I was single at the time and I said, all right, I literally didn't cuddle with a woman for those 7 months because it was bottom of my priorities. And my top priority was trading and capitalizing on this market. So you've got to go through the period of obsession to log the significant amount of hours. But if you can't do that forever. So you got to take the step back. And it's, I talk a lot about pumping the gas and pumping the brakes. There's certain market environments where you pump the gas, you trade significantly and actively and very hard. And then there's other market environments that are less favorable than that, and you pump the brakes. And that's where a lot of people get in trouble after the first year of success. They trade the way that they did in that market environment, and they keep trading that way in the new market environment, and they just slowly get back all their profits. And so you got to recognize the shifting market environments and have to pump the gas and pump the brakes. And the only way you're going to do that is through experience. And just to keep rambling here, we've got an example for me is this past 2022 bear market in stocks. I've seen a bear market in crypto. I've seen a bear market in cannabis stocks. I've never seen an entire bear market where all the sectors were weak and there was bearish rotation going on. And so, I say, okay, this is new to me. I'm not going to be trading aggressively. I'm going to pump the brakes. I'm going to observe because I know this isn't going to be my first and only bear market. It's going to happen again in 5 years, 10 years, whenever it happens again. That's when I'm going to capitalize on it. So I'm going to be observing now, trading smaller, logging it into my memory, learning the lessons, and then the next time it comes around. And that happened with crypto for a ton of people that I know. 2017, they fumbled and made mistakes and gave back their profits. 2021, they smashed it because of all the lessons that they learned prior.
Man, that is so good. I hope people are taking notes here, especially the part about starting out in a bull market. A lot of people were able to make these great profits, say like back in the 2017, 2018 run, and then promptly give them right back to the market. It's like a team when it gets out to a lead, you get up a few points and then you get this overconfidence, and then gradually you sort of gamble that lead away. It's like you go on a gambler's high once you've basically built up the bank, and then the first little bit's okay. Maybe you lose 10% of your profit, but then you can get to a point where you spiral downhill really fast, and without a system, it makes it really hard to hold on to those gains that you made.
Yeah. I get those stories all the time. Being an influencer, people will message me, and it usually is not only did I get back all my profits, but I gave back some of the starting capital as well. So again, we've got to prevent that drawdown and recognize, okay, I don't fully know what I'm doing. I need to pump the brakes, use much smaller position sizes, and try and figure this out.
Yeah, absolutely. You're also probably the calmest trader around, or at least that I know. I mean, you're even known for your smooth speaking voice. I'm really curious to know who your mentor was or how you've learned these qualities.
You should see my first videos from 9 years ago. I talked like this, and I was very introverted and shy, and just learned to project my voice and just confidence. Once you do it 100 times, these interviews, a few years ago, 5 years ago, my heart would be pounding as we start this interview and I'd be sweating a little bit, but you just do it enough times that it becomes second nature. I had a mentor back in my penny stock days, and he was on Investor Hub, which is a forum. And, that was the prequel to Twitter and Stock Twits and all that. And again, it was just observing him and saying, okay, this person is right more than everybody else that I'm looking at. And he's using charts. So I just followed him around and just, he was very generous in answering my questions. So I'd say, all right, he's looking at Bollinger Bands and RSI and volume. And I literally would just try and emulate him where, he would say, okay, if I'm him looking at this chart, what would I say? And so then I just started doing my own analysis as if I were him, with his voice in my brain. And that helped me significantly in terms of speeding up my learning curve. You got to have a mentor. And a point that I just made recently is, as I get further along in this game, now year 13, it's great to have mentors that have decades of experience because they see it all. But there is something to be said about having mentors that are earlier in their journey, year 5, year 6, because the lessons from the first few years, which are so critical, are much fresher. If you're looking back 15 years, 20 years, you're going to lose a lot of the memories and, take a lot of things for granted that you may have experienced back then. So I would suggest as many, have multiple mentors, some that are earlier in their career, some that are veterans, to get all the different perspectives in the market.
Yeah, I remember those early days, Investors Hub, Stock Twits, places like that I discovered before I even discovered crypto Twitter, as they call it, or FinTwit. And yeah, I definitely had a few people that I came to respect in those communities as well. How much would you say your routine has changed in the past few years now that you're a more you're a more experienced trader with that capital built up from these previous bull runs? Would you say you're spending less time on the screen, or how has your routine kind of shifted from those since those earlier years?
Yeah, it's been a period of obsession that has lasted many years. And, again, I preach balance, but I'm a bit of a hypocrite in that regard. So I am looking to continue stepping back a little bit and just having a bit less screen time. It gets excessive, and I don't want to look back later in life and regret how much time I spent on the computer screen. So I do plan on, recently I've started swing trading more, and, I've been a day trader at my core from day one, and have wanted to step back and shift into getting better at swing trading and having that mindset. And it's a psychological barrier, because as a day trader, all right, every day my goal is to have more net worth than the day before, and just all these base hit wins and keep locking it in. Whereas if I'm a swing trader, I have to accept the drawdown. That's, if we're going to be in a weekly uptrend, there's going to be weekly consolidation before continuation. And I have to knowingly sit through that drawdown. And it's the kind of thing where, if I'm in a swing trade that's based on the daily and the weekly time frame, I'll be watching the hourly chart, and I know that we're about to pull back on the hourly. I've got 95% certainty. And it's so hard for me to not act on that and say, nope, this trade is based on the daily. Your stop loss is not being hit. Your target is not being hit. You can't act on that hourly time frame right now. You have to sit through that consolidation. So I do plan in the coming years to be stepping back a little bit and to be working on the balance that I preach about so much, because again, longevity and sustainability, this many hours, 7 days a week, every year, is not sustainable. And so again, once you get to the point where you can put it in cruise control to a certain degree, I am planning on shifting my routines a little bit. And the other aspect of that is just, perception of time, where, if you're doing the same thing every single day, time flies. And if you're doing new things, new experiences, breaking up your routine, the perception of time, is slower. And obviously we want this lifetime to last as long as we can. And so that's another aspect of it. I don't want to look up from the computer screen and say, oh man, I'm 45 now. Where did the last decade go? So that balance is important.
Yeah, that's a very key and sobering thought there. I'm going to just drop this in here. If you guys are not following already, drop at the chart guys a follow on Twitter. And I also would recommend to strongly consider subscribing to their YouTube channel as well. Are there any other places that we should be following you, Dan?
Those are the main two, of course, our website, but we've got, we're putting content out on YouTube, free content daily, and we've got Twitter. So those are the two main avenues for following us.
Perfect. Yeah. Would you like to take us through some of your charts or the setups that you're looking at in the markets? Because you see the market with such clarity that everything you do kind of looks easy, and that's kind of the mark of a true professional. Every time you get on screen, it feels like that the viewers are hanging on to every word you say.
Appreciate that. Yeah, let's go to the charts. So we'll talk about Bitcoin first. And, one thing that I really dislike when I am in a trade or looking at a setup is when everybody is looking in the same direction. And that's where social media can come into play a bit in terms of, getting the perception of what everybody's looking at. And so here on our chart, our screen here, we've got Bitcoin on the 6-month time frame. So this is, very long term. And I'm the voice in this current market environment that is saying, yes, we're bullish off the lows. Yes, the broader market is extremely strong. The bulls are gaining confidence. There's significant trading opportunity again in the altcoin space. We got the ETF, we've got the halvening, we've got all this stuff. But I'm the voice that is always a little bit of devil's advocate, just to ensure that we have game plans for all scenarios. And so I really dislike how all of crypto Twitter is certain that an all-time high is coming this cycle. It absolutely is a possibility. One of my game plans is Bitcoin new all-time highs and, back to crypto euphoria. But I absolutely have a secondary game plan where I'm watching the last move in 2017. We topped out, we hit the low. This is your classic equilibrium pattern of tightening ranges, higher lows and lower highs. And it took a couple of years. And then, of course, we broke to the new all-time high. I am leaving a possibility that happens again. I know you got all the headlines and the narratives, but if we do not break the 69,000 high, I'm watching for the possibility that we set a lower high and tighten up for a number of years. We could tighten up into 2025 potentially or beyond. And so I just want to plant that seed for everybody. There's a lot of seeds that I plant. One is exploring different markets. I try and get crypto traders to explore stocks. I try and get stock market traders to explore crypto, because you want to be looking at as many opportunities as possible. Different markets will have different opportunities at different times. And so it's the same thing. Have a game plan for all-time highs. Have a game plan for a lower high and a tightening range. And that, it'll be clear that that's shaping up, if it is going to shape up, just in the sense that, we'll confirm a weekly downtrend and will retrace significantly, and then people will start to get bearish again, and the sentiment will shift. But again, I just want to plant that seed, because not a lot of people are doing it. There's so many extremes in social media, and you can find really good mentors like I did on social media. 90%, 95%, whatever it is junk. You got to sift through it and then find the people out there that give you good information. And again, it's sensationalizing things on social media gets the clicks. We're going to 200,000. We're going to 10,000. Those are the extremes, but what about the non-extremes? Well, we could tighten up for a number of years, and then we'll look for a break of that tightening range for another significant amount of opportunity. One thing that I do in markets is, this is a concept I've been explaining recently, is a conveyor belt of trades. And what I mean by that is just trade setups that I like on different time frames. If I'm day trading, I'm looking at the daily and the hourly chart. If I'm swing trading, I'm looking at the daily and the weekly chart. And if I'm long-term, I'm looking at the monthly and the weekly chart. And so there's a number of charts out there that, we've got daily tightening ranges forming on names like, let's just say, what's Algo doing right now? We were watching yesterday. Nope, not Algo. A couple of these crypto altcoins have tightening daily ranges forming. And let me just get this name. When you got 100 names, it's hard to keep track of them all. Dot. All right, so Dot's a really nice tightening daily range. I really like tightening patterns, because when you recognize an equilibrium and a tightening pattern is forming, you can make plays off support, you can make plays for the lower highs, or you can just patiently wait for the break to take place. And so this is an equilibrium where you've got your high, your higher low, lower high, pretty much a double bottom there, another lower high. So we know a number of things about this pattern. Number one, it's a tightening range. The volume is declining, which is what you see in these equilibrium patterns. And we know that this pattern is going to break sometime within the next 3 or 4 days. How can I make that assumption? You could just visualize the candles. Let's say we form another higher low and then another lower high. Next thing you know, 3 days have gone by. We can't get any tighter. We're going to break. It's the balance, the scales. I like to imagine the old school justice scales, and supply and demand are just doing this. And then they reach a level point, and then we flip one way or the other. And that's what happens when the pattern breaks. So you've got this pattern on the daily chart. Okay, I know this break is coming sometime within a few days. So it's earlier on the conveyor belt. It's coming towards us. Then you've also got the monthly. So let's go to KWEB. This is a Chinese ETF, Chinese stock ETF. This is the monthly time frame. This has been tightening up for over a year. So this is further down the conveyor belt. I know in a couple of months, this is going to be making its way towards us in terms of a break is imminent, a break is coming. And we had an example, CCJ is a uranium stock, just a beautiful year-long tightening range. It breaks bull, and here we are now up at all-time highs, just significant follow-through. So one of the patterns that I love is finding those tightening ranges and then trading within them, and also trading those breaks. And that's, back to the Bitcoin 6-month chart. That was one of the beautiful things about the dust settling after the 2017 run, where we just tightened, the scales balanced out, and then they flipped where demand significantly exceeded supply, new all-time highs. So that's just one example of my trading style. One of my edges as a trader is certainly oversold bounces, play those all the time, depending on market environments, but also finding these equilibriums and tightening ranges and playing their breaks.
Yeah. And also you mentioned a lot about how, regime filtering, in a sense where you're only going to be playing those oversold bounces when the market conditions are right. Like when the market is in an uptrend or the asset is in an uptrend, you're going to be looking to buy those daily consolidations or 4-hour consolidations when the asset becomes oversold on those lower time frames, but in the context of an overall daily, weekly uptrend, right?
Yeah, and that's the thing, again, the skeptics of technical analysis will plug something into a back tester and say, all right, hourly RSI under 30. How reliable is this signal? Meanwhile, and then you'll get your results, whatever. Meanwhile, hourly RSI under 30 means something completely different to me in a daily, weekly uptrend than it does in a daily and a weekly downtrend. I'm not buying hourly oversold in the daily, weekly downtrend. That's trading counter trend. Whereas if we're in a strong bull market, it's what we call back burners, where, if you don't want to be chasing, you're waiting for the shorter term oversold conditions to mark the longer term higher lows. And so, just examples off the top of my head, the stock market has been ripping for 3 weeks in a row. And you look at something like Amazon. So, okay, when am I going to get in? We're going straight up. Well, we hit first hourly oversold conditions last Thursday. And you can see the 2 times that we've got right towards hourly oversold. That's the best buying opportunity in this bull run. And so I call it a back burner, because you're essentially, same concept as the conveyor belt. You're saying, all right, the next time this asset that's been running significantly hits hourly oversold conditions, I'm going to look for an entry and look to play a bounce. And so you just stick that trade idea on the back burner and you wait for the trade to come to you. You wait for those conditions. And in an ideal world, hourly oversold will mark a daily higher low, and then you get continuation of the trend. And so I learned this in crypto 2017, just observing things. There was a period where if you just, I had a friend who was big into crypto, but not big into charts and trading at all. And I said, man, just when the 5-minute RSI gets under 30, just buy then. And that just worked for so long until all-time highs were hit. And again, it's a characteristic of a market environment. And one of the main clues in the crypto world over the last 3 weeks that showed us things were shifting, there were 2 things. One of them was back burners started working with, oversold conditions. And here's just Bitcoin, 4-hour oversold, hits 35,000, straight back to 38,000. That was the first 4-hour oversold conditions on Bitcoin since this entire move from 26,000 took place. So the characteristics that showed us the market environment is changing in crypto weeks ago was back burners started working and rotation was going on. And rotation has been a major thing that I've learned from crypto and applied to stocks. There's tons of things that I learned in crypto that, again, 7 years into trading, I was learning lessons in crypto and then brought those lessons over to stocks that definitely benefited me. And the other is rotation, where, there were weekends, a bunch of weekends in a row now, where Bitcoin has traded sideways. And while it has traded sideways, that has allowed altcoins to get their turn. And, we see the altcoins, we see Bitcoin go sideways Friday, Saturday, Sunday, and then we get the big move up in a bunch of altcoins. And again, that just shows us bullish rotation. And that's something I'm applying to stocks as well, where, if the S&P 500 is trading sideways, but the Russell 2000 is seeing a big bull move, then that's indicative of healthy rotation as well. So just little observations of, characteristics of a healthy, strong market versus characteristics that the market environment is changing. So just to go on that note, if we were to see what's the first sign of a changing market environment, for me, if the back burners stop marking the higher lows, for example, if Amazon hits hourly oversold, bounces a little bit, and then drops to a lower low, that tells me, okay, the market environment is shifting. The back burner is not leading to continuation. And it'll be the same thing for Bitcoin. The next time Bitcoin hits 4-hour oversold, it'll probably bounce a bit. But if, we hit 4-hour oversold, we bounce a bit, and then it results in a lower low, that will tell me the market environment is shifting and to, again, pump the brakes. That's when we then pump the brakes, because the way that we've been trading in this bullish market environment for the last month is not going to work in the same way if we keep doing the same things now that the market environment is shifting. So I would say that that's a very essential trait to have as a trader. And again, you only get it through experience, through years, is the ability to recognize shifting market conditions to adjust your trading style to them.
Yeah, so note that down, guys. In strongly trending markets, you are typically looking for that first hourly oversold bounce or 4-hour, like in that case that Dan just showed us with Bitcoin there. So once we set that kind of higher low during those oversold conditions, the true sign of strength is essentially you don't want to see those lows taken out if the market is going to remain in the direction it's going. And that gives you a really good filter to know that if it is breaking those lows, that something different is starting to take place here. So that's your first really big red flag, so to speak.
Yeah, and if you're in a swing trade, you can use those levels to just walk up your stop. One thing that I will do is, oftentimes I'll just use an example of Tesla. And this was another example of playing an oversold bounce, looking for a longer term higher low, and looking at first daily oversold conditions. So Tesla had this rip from 150 up to 300, so 100% move, and then we drop and we get to first daily oversold conditions. So I went long on this gap down day here, and then just every time we set a little daily high or low, just walking my stop up, moved it up to here, then I moved it up to here, then I moved it up to here, and eventually stopped out and didn't nail the top by any means. That's another thing. Don't expect to nail tops and bottoms as a trader. That is not what is going to happen more often than not. We got to be satisfied with the meat in the middle. And that's why I will often scale into and out of trades. Again, knowing that I'm not going to nail that top, but that then allowed for locking in those gains. And then we rolled over. But again, just, protecting those gains rather than seeing the top hit and not having a game plan of when I'm going to lock in profit. And then, I missed my opportunity. I walk it up with those support levels. And oftentimes those support levels are established from the shorter term oversold conditions.
Yeah, that's perfect. And then you eventually essentially get trailed out of the trade. And you also talk about the importance of volume confirmation, and you have a few things you look for that are like special events like volume climaxes. Would you like to talk about that a little bit?
Yeah, so that's one of the things when you're trading a breakout market. There's only, there's two ways to take profit. One is walking your stop up, but what if we're shooting up so significantly that the last support level is 10% under where we are now? I don't want to give back 10% of these gains before I stop out. So in a hype and euphoria market, oftentimes it will be volume climaxes that signal a temporary top. And again, this is something that you got to get good at through observing them and logging them away in your memory banks of, okay, I've seen this now 15, 20, 30 times. I'm starting to get used to this as a signal. And the reason that volume climaxes take place is, I don't have any off the top of my head here, but we're going to keep an eye out on, actually Sushi did one here, but it's the reason that we have volume climaxes is you get the largest concentration of volume, both bull and bear at the same time. You get the last bulls that are late and chasing the move on the way up, and then you get the bears start to pile in on the shorts looking for that temporary top. And so just the example on Sushi here from a couple of weeks ago to start November, we had that significant move from 80 cents to $1.30 very quickly. And you can see the volume behind that 4-hour candle that then marked the high. We didn't get back past that point, and we pulled back very quickly, 30%, and then just slow bled a little bit from there. And again, you can even just zoom in further and further where, look at the hourly here. That was the highest hourly volume. And you go back and you look, is there anything even comparable for weeks? Nope, not even comparable. How do you know it's happening as it's happening? Well, you can look at the average. This orange line down here is the 20-period average volume. So that's one thing to measure against. And also just the previous candles. When this candle was forming here on the hourly, we had, established we were at the 20-period average with still 75% of the time left in the candle to go. So I'll use percentages. I'll say, all right, if we've got, 60% of the prior highest volume hourly candle, and the candle is only 20% of the way through forming, I know that this is going to be a very high volume candle. And again, that's one way to just say, okay, now's probably a good time to be scaling out. Again, you're not going to sell at 129. You got to be scaling out. Maybe I'll take 20% profit, at 110 and 20% at 115 and 20% at 120. But it helps us be able to gauge, okay, things are getting a bit nutty and we're likely to see a temporary top here. Volume is showing us that may be shaping up.
Would you agree that oftentimes too, when you zoom out, on the chart and maybe go to a higher time frame, when the price is doing something like this candle here, it will often be coinciding with a support resistance level somewhere on the chart. It seems to often occur that way, but you can get sort of stuck in the moment thinking maybe it'll break, maybe it'll go through, but assets very rarely will break those higher time frame resistances on the first attempt.
That definitely helps us, but we're also have an environment where, we know crypto's been bearish for so long, and because of how massively it dumped, there are big windows of no price action, no meaningful price action on the way back up. And so that's what allows for these nice gains, but it also leaves us blind a little bit where we don't have that clear level to be going off of. And so, into this move on sushi, I'm not sure that 130 was very meaningful. Well, all right, it was. So yeah, good example. There was a little wall there at 130, but let's just say that there wasn't. We could then go to the hourly and say, all right, well, now we have a new level because look at 130, and then it did act as resistance multiple times from there. So I always put more weight into recency, the recent price action. If there's a resistance level from 6 years ago, it means a lot less to me than if there's a resistance level from 6 months ago. So once you set that 130 level, that's now the level that the entire market is watching. And that's the level that bears are going to short against. Because again, just think of risk and reward. Okay, sushi's really overextended. If I'm a bear, I short at 127, I stick my stop at 131. I'm risking 4 pennies. My reward possibility, if this is a top, is way more than 4 pennies. And so that's why you get these levels that start acting as support and resistance. And same down here is support. Same thing. The bears were defending this level, the bulls were defending this level, and there were significant swings off of both of those because that's where the risk and reward is most beneficial for the trade because the risk is small, the level is very clear, and the reward potential is much greater than that risk.
That's interesting. So in this market, I think traders, from what you're saying, seem to have a recency bias, and they're only seeing this kind of window of price action that's happened in the recent past. So having that in mind, we should also be paying attention to this more recent price action because the market is almost treating these assets as if they're in blue sky breakouts, even though they're not truly in blue sky breakouts. But I think it's fair to say from that especially like charts like the one we have on the screen here, you're essentially looking at those tightening or equilibrium patterns now, as you call them, and waiting to see, is it going to break that triple top there, or is it going to start to now break these support levels and go into a higher time frame consolidation, right?
Yeah, and that's equilibriums are the most common pattern in trading on any time frame because the way that the market works is you see price discovery, whether it's a big breakout or a big dump on high volume, and then the most common scenario is then you just imagine the market supply and demand. The market is now trying to determine, okay, what's a fair value for the asset at this point now that this move has taken place. And you get, again, the scales just doing this, like right, tighter, and then they break. And so, again, that's why I would suggest, if you're going to focus on any one pattern in markets, get familiar with the equilibrium because you'll start seeing them everywhere. And you can anticipate when they will be the most likely scenario. You get a big breakout, you get a big pullback, scout that tightening range.
Mm-hmm. Very good. And do you usually set alerts on these equilibrium patterns, like a price level or a trend line or something that you're looking to break through?
Honestly, I don't use alerts, and this goes back to obsession. It's at the point where I'm putting in so much time and effort into trading and into the screen. If I'm not on the screen and aware of what's happening with price, it's intentional. And so I don't want my phone vibrating when I'm out in the woods. I'm intentionally getting away from the screen. If the trade is going to, if it's a trade that I'm going to take, that means I'm ready for it. I'm watching it and I'm sitting at my computer. I don't trade on my phone. I personally think that it is a disadvantage. If I've got 3 big screens and I'm at my home base, I think being out and distracted and on my little phone is not the ideal way to trade. Granted, there's scenarios where if we're in an unusual scenario or a significant opportunity presents itself, that's different. But in terms of, consistency, for me, it's essentially, if I'm not sitting at the computer, I'm not trading. And that's because I'm not giving my 100% best effort. And if I'm not giving my 100% best effort in a very difficult game, I have no business throwing my money around.
Awesome. There's another golden principle from Dan, guys. If you're not ready 100% to take the trade, then don't take it. If you're out at the grocery store looking at your phone, or you're on a camping trip on the weekend or something like that, it's probably better to just turn off the phone at that point, and wait till you get back to your computer, but before taking action on your setups. I think it's something where you can encounter a lot of distractions, especially during these bull runs. But just being fully prepared to take the trade is a lot better than looking at an alert on your phone and FOMOing in or something like that. Awesome. Do you also keep a trading journal, Dan?
I used to, a lot better than I do now. My trading journal these days is essentially my wrap-up videos that I do, where, at the end of every trading day, I'm making a 15, 20-minute video where I'm recapping the action, and that's burning it into my brain. And I'm going over, my trade and how it played out yesterday in the crypto live stream I did. Talked about the Bitcoin Binance news stopping me out of a MARA position trading in stocks, the crypto miner, and just, reviewed that trade for a few minutes in that live stream. And so that's essentially my review. But I would suggest any trader that is not, creating content like I am, to absolutely be journaling your trades. You got to know what's working and what's not working. I love oversold bounces, but I'm also, mentoring people that don't trade oversold bounces because they have recognized this is not my trading style. I don't like, how it makes me feel when things are dumping, whatever it is. And that's perfectly fine. Everybody is different. And so we don't, we have to be able to collect data on ourselves to know this information. It can even get down to the point of, okay, my kids are home from school on Tuesday, whatever. And I can look at my stats and say, well, Tuesday is my least profitable day. And so maybe I just don't trade on Tuesdays anymore. We want to trim the fat. We want to ditch anything that is not serving us and focus on the things that are working. And the only way that we know what those things are is by tracking our performance to a certain degree.
Awesome. We have a really good question on the screen here from Erica. What are your biggest regrets as a trader? What would you change if you could?
It's a good question. Oh, I've got plenty of, I can go through plenty of individual regrets on a specific situation. My big lesson was having success in penny stocks. Fundamentally, I thought I picked the penny stock that was going to make it, this rare earth miner, and went up 700%. And I turned my $7,000 into $45,000 as a, early 20, whatever year old. And I got it. I figured it out. And all this, I'm set. And then I gave it all back, literally all of it. And so that was my lesson. And the only reason I did not get back my 2017 crypto profits was because I had already done so and learned that lesson and knew to apply it to that market environment. So plenty of those regrets as far as I should have, locked in profit. But honestly, looking at where I'm at right now, I wouldn't change a thing because I'm extremely grateful and blessed for how things have turned out. I've exceeded my goals as a trader over the last decade. And I know that if I had not experienced those lessons, that I might be tempted to change my past. Again, I wouldn't, you take away that lesson where I gave back $40,000 and maybe I get back $400,000 in crypto. So I think those lessons are essential in the journey.
Yeah, absolutely. It's all just numbers on the screen at the end of the day. We all have to pay our tuition to learn in this game, and sometimes that's giving back $40,000 in profit, and it could be for some people it could be blowing up their account, their initial money that they put into the market. It's something that every trader, I believe, experiences unless you get incredibly lucky and have that home run right from the start, and then somehow manage to hold on to those gains. But that's like the 1 in a million scenario. It really doesn't happen that often. We have another question here. Do you think starting to trading crypto with the plan to trade shares in future? Will it be easier to trade shares after the highly manipulated market of crypto?
So I'll say that, if you trade crypto and then move to stocks, you're going to be better prepared. If you trade stocks and move to crypto, you're going to be better prepared just from the experience standpoint. But there are nuances to both markets in the sense that, maybe you say crypto is more manipulated, but it trades 24/7 and your stop losses are going to be honored at any hour of the night. Whereas you go to stocks, now there's gaps. What is a gap? Well, you can have a stop loss at $100 on Tesla. And if there's bad news or if the market goes down overnight, it's going to gap down at 97. And you thought your risk was stopping out at 100. And now you've got an extra 3% of risk there. And that's something that takes getting used to as well. There's a lot of differences between trading cryptos and stocks. If you Google Chart Guys, stocks to crypto, I've got an hour-plus long video talking about making that transition and the many differences that there are in the different markets.
Yeah, 100%. Do we have any other questions, guys? Feel free to post your questions in the chat, and we'll get to as many as we can. And do you think, Dan, with the current market situation, that we need kind of a pullback in Bitcoin before alts start to or continue to run, or do you see this being a more bullish scenario where we get a lot of continuation in the market, particularly in altcoins?
I think at this point in time, patient traders are waiting for weekly consolidation because, again, it all depends. Like I said, the back burner trades, the first 4 hour oversold. That's when we can get some entries with better risk reward, so we don't feel like we're chasing. But again, I look at Bitcoin and say, okay, well, the last time we had weekly consolidation was 26,000. I just constantly remind myself, especially all these altcoins, weekly consolidation is inevitable. It's going to happen. And that's the next opportunity for looking for swing trade entries. And so any of these, altcoins, Sol or whatever it is, I look at this chart and say, do I want to initiate long swing positions here? No, I want to wait for a weekly higher low. And then I'll be a lot more comfortable initiating long swing positions. So there's nothing wrong. I mean, you got the people that have been waiting for that consolidation for a couple of weeks, and it gets a little bit hard to fight the FOMO and to watch things still go up and not roll over into consolidation just yet. But again, it's about waiting for that trade to come to you and saying, just clear statements. I am not going to long a swing position at this point in this market until we get weekly consolidation. That's a fine statement to make. And if you can adhere to that, then you're not, every day you're not sitting at the computer saying, what should I do? What should I do? You look at the weekly chart. Have we started weekly consolidation? No, then I'm not doing anything yet. And I'm waiting for that to shape up before I get confident looking for that entry from here.
Mm-hmm. Very good. Does Dan have a low time frame version of his strategy? For example, a 4 hour high time frame view and executing on something like this on the 5 minute?
Yeah, there are all these time frames have a relationship in how they interact with each other. And I'll use the 5 minute time frame to give me clarity on the hourly. I'll use the hourly time frame to give me clarity on the daily, the hourly, or the 4 hour. And so, if I'm looking for an hourly higher low, I'm watching for a 5 minute trend change back to the bulls, and backburners work there as well. NVIDIA just hit all time highs. And I know that NVIDIA has a good bit of space for an hourly higher low. It's pulling back now, but has space for an hourly higher low. So I'm watching for 5 minute oversold conditions, and I'm watching for a 5 minute trend change to try and shape up for the hourly higher low to be shaping up as well. And this is a concept that it's like riding a bike with trading. It takes a while to get it. And I can't tell you how many messages I've gotten over the years where someone says, finally, after 6 months of watching your video, I get this relationship between the time frames, because it's really what gives clarity in the markets, knowing how these time frames interact with each other and knowing which time frames to be looking at. It's a very daunting thing when you're just sitting down fresh. But we've got a whole bunch of content about these concepts. We do webinars and stuff. So again, check out our YouTube channel. You could spend the next year going through the free videos on our YouTube channel from the last 9 years, thousands of them, So I highly suggest doing that. But this is certainly one thing we talk about very often.
Yeah, that time frame is really key, and the principle is very simple, but that's the big piece that you have to keep in mind. Like when you're looking at that Solana chart, for example, it's in that weekly uptrend. But now, given that it's a weekly uptrend, would you be looking for like a daily oversold condition to for that first entry, or would you be looking at like a 4-hour oversold?
Daily would be a bit of a red flag for me. If we were to get all the way to daily oversold from here, that would be a very significant retracement on the weekly chart. I would definitely still be interested in that bounce, but that would also then open up the door where we might just set a weekly lower high as the result of the next bounce. But again, I just go down the line where if something has broken out, I look for first hourly oversold. Once we use that up, once that has already happened, next one, we wait for the 4-hour. Once the 4-hour gets used up, the next one, we can go to the 12-hour. But Solana has not seen 4-hour oversold in a long time. And so that definitely is a setup to be watching. And I would love, when I'm playing these bounces, I want as many timeframes oversold as possible. Give me the 4-hour oversold. Give me the hourly RSI in the low 20s. Give me the 15-minute and the 5-minute all oversold together. And that increases my conviction that at a minimum, we'll get a short-term bounce. Even if this isn't the bottom, we'll get enough of a bounce that I can maneuver a little bit, maybe sell a third of my position, get my break-even cost basis a bit better. So the more timeframes that are oversold when you're looking for that back burner, the better in terms of having some conviction.
Yeah, I've heard you talk about that, where if you have multiple timeframes starting to get oversold, that's where you like to start scaling in to some of these trades, because I think also key to succeeding in crypto in particular for newer traders is to avoid leverage. And I think you've been a good example of that, even as a more experienced trader, where I don't ever hear you talk about taking like 5 or 10x leverage on a trade.
Yeah, I've traded with margin in stocks before, but I've never traded with leverage in crypto. And, easy for me to say I was here in 2017 when I had massive thousands of percent opportunities. But I think that leverage is extremely dangerous for newer traders. And it's a great way to blow up your account and lose your money. I think that, if you're on year 3+ and you've proven discipline to yourself, then you can, if you want, start to play around with some leverage. And one of the benefits is, in this crypto market environment where we don't have a ton of trust in a ton of exchanges, if you are using leverage, maybe you're only risking, crypto's unique in the sense that if you have money just on an exchange, you're risking that money. And we saw that from certainly FTX. So, if I have to put on $50,000 with no leverage, or I can put on $10,000 and then trade with some leverage, that, lowers my exposure to the exchange liabilities.
Yeah, that is, I think, going to be our final point of the day, because it's such a good one in terms of achieving longevity as a trader, guys. In this market, if you want to make it this year in 2024, 25 and onwards, trade without leverage, especially if you're newer to the crypto market. Just try it. You'll do a lot better, and you'll hold on to a lot more of your gains by avoiding that. So with that, I would like to thank Dan very much for being so generous with his time today. This has been an absolutely fantastic interview and time spent with you today. And again, guys, follow the Chart Guys on Twitter as well as YouTube, and I would highly recommend and suggest to go through as many videos as you can, but to grasp these concepts and then start to apply them. Because once you do, and once you grasp the time frame analysis in particular, as Dan was mentioning, it'll transform the way you operate in these markets. And I really think that it's something that every trader at every level can benefit from. Dan's content, also his team members that contribute as well. So yeah, thanks so much, Dan, for being here today, and we really appreciate all of the fantastic insights you've been able to share with us.
Yeah, thanks for having me. Shout out to the Burb Nest for putting on this educational series. It's been a good one.